Yo.
If we were to calculate the interest, right, what would the interest be?
I got the answer for the interest. It would be 60,000 times 10% divided by 10 out of 12.
Exactly. So if we were to do that, and let me kind of make this a little larger. If we were to do that, I'm just going to use Excel. We would say the interest is going to be equal to the principal amount, 60,000 in this case, right? Mm-hmm. Multiply, and you said it's going to be by how much?
The
by
10%.
10%. So we'll put 0.1, right? And then multiply that by how much?
10 divided by 12 months.
Perfect. So it's the number of months that's outstanding and divided by 12, the full year. Does everybody see the math that we're doing to come up with the interest in this case?
Yes, sir.
Go ahead. Alva, did you have a question?
Oh, I see it.
Oh, good. Excellent. So now we can say, okay, good. Well, there we solved that formula. So now we say interest expenses equal to 5,000 for the period of time it's been outstanding. And so to take it a step further, what is the adjusting entry we need to book? We need to debit to increase
interest expense.
Perfect. Yeah, exactly right. I can't spell, right? Interest expense, and then we need to credit to increase what?
The same as the later.
Not quite. I'm gonna move that over. Debit to credit to increase. So we have an expense, right? We know that we incurred an expense because we borrowed the money, right? We haven't paid it, so it's not cash going down. Good. So Elliot in the text that you had, and Shi and Lee as well. So interest.
Payable.
Good. Liability. Perfect. All right. And I'm actually just going to move this. It's kind of getting in the way. All right. So we'll do that, and then we'll say for each one of those, we're going to say that's going to be equal to 5,000. All right. Does that make sense?
Yep.
Good. So any questions on this one? This is a pretty straightforward accrual, but there is the trickiness, right? The trickiness is what? The trickiness is in the dates. You got to be careful, right? How long has the loan been outstanding? And then I think that's pretty much it. Well, then obviously just knowing it's 10% per year, right? So 10 over 12. All right. Good. Who wants to help me with B? Let's do B.
I'll do B.
All right, Elliot. Perfect. Let's do it.
So it accrues for the current year. So debit to increase expense.
So I'm gonna move because it's a little different for me working from this different computer. But basically, yeah. So first step is we know we need to book the utility expense because it's been incurred, but we haven't paid for it yet, right? And we know that amount is $360. So based on that, let's go ahead and do the journal entry, kind of where you were going, Elliot. Good. So what is and we can even just put the amounts in because we already know, right? That's the 360. So what is going to be the debit and what is going to be the credit?
The debit is going to be for expense, utilities.
Good, and it could be utilities depending on the problem. It probably says utilities, or you might see electricity expense. It could be more specific or general. It doesn't really matter. But the point is expense, right? We're debiting to increase. I can't spell it all. We're debiting to increase the expense, and then we're going to credit.
We're going to credit liabilities, expenses, or accounts payable.
So in this case, right, remember accounts payable, so you're correct, first of all, it's a liability. Yes, we're going to pay it later. But anytime you're looking at an account title, in this case, we know it's a payable, right? Typically when we're dealing with accruals and deferral, we're going to deal with payables. And so I would use whatever you did here, right? So since we said utilities expense, I would say utilities payable. Does that make sense? If you put electricity expense, I would say electricity payable. It depends on what you want to do. It doesn't matter. You just want it to be consistent so we know what we're talking about if we're looking at the adjusting entries. Does that make sense? Good job. Excellent. Okay, are there any questions on this question that we did the exercise for?
So when it comes to things like utilities payable, interest payable, are those subcategories within accounts payable, or is accounts payable just for like products or services?
No, again, any accounting system can be set up, I guess it's kind of any way the user prefers, right? And so what you just asked is, what I think you're referring to is kind of like a grouping, right? If we look at our trial balance or we look at our summary financial statements, we don't want to see like 1,000 different kind of payables, right? So we might have all of them separately in our account so we can see what we owe for each item, but they might get consolidated and rolled up into an overall accounts payable sort of account, and that would be fine, right? No problem at all. I'm doing it here and kind of like you see, just to kind of get the practice, right, of being, if we want to be more specific. So like, for example, if we have interest expense, let's do interest payable. Okay, if we have utilities expense, let's do utilities payable. Just to kind of keep it consistent. But you're right, you could group it in any way that is preferable.
Presumably there isn't like office paper payable.
Yeah, no, nothing like that. But in real life, let's take it a step further. What would we probably see? Well, we would probably say, okay, well, we're going to buy all of our supplies from Office Depot, for example. We have a credit card at Office Depot. So what are you going to see? Office Depot payable. And that's going to be not necessarily paper, pens, and all that, but just one vendor. You might see a payable to each vendor, and that would make sense, right? Just like even like you.